Happy Friday out there, Team 42. It's your skipper here, Darius Dell, to present our macro minute for Friday, August 23rd, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are, will the BOJ continue to hike rates, and will Powell acquiesce to dovish forward rate pricing? Our answers are Bank of Japan Governor Kazuo Ueda testified to Japanese Parliament today, his first public remarks since contributing to the rapid crash in Japanese stocks earlier this month. His commentary was mildly hawkish and in line with our existing view that investors should prepare for a continuation of the BOJ's policy normalization agenda over the medium term. Our hawkish medium term outlook for Japanese monetary policy is supported by three domestic macro forces. Number one, growth is likely to trend higher in Japan over the medium term. Number two, inflation is likely to remain sticky above the BOJ's 2% target over the medium term. And number three, nominal wage growth just accelerated to the highest rate since 1997 in data that were released after the BOJ's July 31st rate hike. Powell should acquiesce to dovish forward rate pricing, especially with respect to the next few months. We've seen enough good data on the inflation front and plenty of substantial further progress with respect to engineering slack in the labor market. Powell would be remiss not to take advantage of current trends in the data because, as our U.S. grid model indicates, he is unlikely to have as much support on the inflation front by this time next year. Transitioning to our 42 macro dashboard, as always, we'll wrap up with a question from our community. This one reads, Darius and Team 42, focusing on international allocations. There were some major international markets expecting positive grid outlooks, which has me wanting to increase international exposure relative to the U.S. But then I make my way to Dr. Mo, and all the international markets are currently avoids. What are the best signals from 42 Macro when it comes to international allocations? You routinely comment on the PMIs across the world and around the horns, and I made some allocations based on those inputs with some success in the past. Is that a good signal? And thanks for all you do. Honestly, couldn't be more happier and more impressed with the work you've done over the years. So I just want to say thank you to the client for that. Appreciate the kind feedback. We're doing our best keep our clients on the right side of market risk, and our best has been quite good. Without tipping my cap too far. So let's just answer the question there. You routinely, with respect to what are the best signals for 42 Macro with respect to allocating assets, not just internationally, but allocating assets generally, it's either going to be our KISS portfolio construction process. If you're a standard, kind of retail investor that's just looking to retire on time and comfortably, KISS is the best mousetrap out there for that particular agenda. If you are, however, are a professional investor or a sophisticated retail trader and you like to make long, short factor bets across markets, then our discretionary risk management overlay, aka Dr. Mo, is the proper tool to identify where you should be and how much you should be positioned across international markets. And so with respect to the positive grid outlooks and the dichotomy between that and the current negative proper trade recommendations for a lot of the international markets, that's a perfect way to describe our institutional macro risk management process, which separates our fundamental research views from our quantitative risk management signaling. Our fundamental research views, and this is how the best buy-siders in the world do it, by the way, so grab a pen and take notes. Your fundamental research views tell you what you want to buy and what you want to sell. Your quantitative risk management signaling tells you when you buy those things and when you sell those things and how much. And right now, there is a dichotomy between what we would like to buy and with respect to international markets and having a lot of positive grid outlooks for a lot of the international markets versus what the current volatility adjusted momentum signal is and what the current market regime is. Go back and you look at our back test. By far, the most powerful tools we have in our toolkit are our volatility adjusted momentum signal and our global macro risk matrix market regime nowcasting process. And Dr. Mo merges those two things together to generate proper trade recommendations across all the liquid markets in the world, across stocks, fixed income, currencies, commodities, and crypto. And so, as long as you don't have the two thumbs up from both sides of our process, then you should just probably do nothing and wait. It's about having impulse control as an investor. Just because you read a presentation and it causes you to like or dislike something doesn't mean you have to do something about that immediately. It's not like walking into your kitchen. Just because there's cookies in the kitchen doesn't mean you need to eat cookies. Just because there's wine in your wine fridge doesn't mean you need to eat wine drink wine at 10 a.m. in the morning, right? You have to have some impulse control as an investor and realize that the time you realize that something is good or bad from a fundamental standpoint does not necessarily have to be the time you put that position on in your portfolio. You should wait until you start receiving quantitative confirmation in markets, and then act quickly once you receive that quantitative confirmation so that you can maximize upside capture in bull markets in those exposures, or minimize downside capture in bear markets and those exposures. So we'll wrap it up. Hopefully you learned some things today. Hopefully you learned some things from us this week, and we'll catch back here on Monday. Have a great weekend. Cheers.